This call should be very insightful to a lot of you guys. The ones that are reoccurring, 7, 8, 9 out of 10, weeks that we've had, prices kind of gone to the direction in which we've wanted it to. This week was a little different, right? We didn't quite get the targets that we were expecting to hit. And that's good because you're going to continuously see that over and over and over again. We will not have this idea where every single week where we point is where it actually shoots, right? And the best thing for you guys as traders and the best thing for us as a community is to learn how to rebound from that and understand how to not freak out, not be surprised by it in any manner, learn from it and understand how to go moving forward, right? How to look at the charts, how to analyze it when it doesn't quite meet your expectations, right? How do you potentially shift bias? How do you stay confident in your current bias? And how do you just kind of sit there and let it give you a little bit more information to then curate a bias? Those are a couple things that we're kind of looking forward to talking about today. My DXY targets for this week did not currently get hit. Obviously, I was aiming for that 107,400 buy side area. It did not get hit. Dollar kind of flipped. Same thing with ES. After going lower and delivering into most of the sell side targets, it kind of found a low and then flipped also. So, something to just note going forward in this call is how do we personify our current bias and our confidence in these charts going into next week, right? How do you come back after a week where really I didn't take a trade this week? I didn't really do a whole lot of trading this week. But even then, right, even if I did take a trade and I did lose a trade because price didn't necessarily deliver to where I thought it would, how do I come back? How do I come back with a clear slate of a mindset and kind of have this underlying understanding of how I want to put myself back into the market? This week we are back with exercises, so we do have an exercise for you guys this week. I know we haven't really had any real exercises the past 2 weeks. We've been wanting you guys to do a lot of reflecting and kind of taking a step back outside of your body and looking inward and seeing what are some things that might be troubling you outside of trading. What are some things that you've been doing that you like in your trading? And I'm curious and excited to kind of read over those. Shout out to Mauricio. He's got the back table back there. I got one in my kitchen too. Keep the blood flow good. Keep the back straight. I love it. I love it. I think we're good to go. I'll go ahead and jump into news. Henry, can you give me access to share screen?
Yeah.
Pretty please. All right. So we will go ahead and, yep, we are good to go. Okay, so news this week. Obviously, last week was NFP. If you were a participant in the market or you weren't and you were just studying, whatever the case is, hopefully you were able to gain insight as to potentially why we really do force and kind of try to preach as much as we can to make sure that if you are trading, you're trading earlier than later in the week, because even though the market is going to move and it is going to be volatile and there will be movement in the market, probably more so on the back end of that week, there's a lot of reasons as to why we're kind of just a speculator going into that, and we're on the sidelines on the bench because we know that almost anything can happen, right? And you guys saw that unfold of how things were kind of playing to the tune in which we thought it would, and then after Wednesday, Thursday, and Friday, things obviously get a lot more volatile, and it ended up not going in the direction we first intended it to. So going into this week, we have obviously less news than we did last week, but nothing on Monday. Tuesday, 10 a.m., you have Member Waller speaking. Wednesday, you have Powell speaking. So 10 a.m., Waller speaking on Tuesday, 9:15 a.m., Powell speaking on Wednesday. On Thursday at 8:30, you have unemployment claims and Powell speaking again in the afternoon at 2. And then at 10 a.m. on Friday, you have consumer sentiment and inflation expectations. So a couple things to note here. Obviously, that Wednesday and Thursday slate, you have Powell speaking, and note how on Wednesday he's speaking prior to equities open, and on Thursday he's talking in the PM session. So kind of understand how that could potentially play out. I actually like when Powell speaks. when it's not in an FOMC manner, right? So there's no FOMC this week. There's nothing with regards to FOMC. It's just Powell stepping up in the chair and talking about what's currently going on in the economy, rates, all that stuff. And so with that being said, I like to utilize that as healthy volatility, even though obviously it can go pretty haywire and get pretty volatile, but it's still something that I think is very tradable with the experience at hand. So, keep note for Wednesday and Thursday, and especially that, pre-equity open. That doesn't necessarily mean that I'm going to be in a trade at 9:15 or prior to 9:15. That just allows me to understand that, okay, 15 minutes prior to that equities open bell, we're going to have that volatility. So that opening at 9:30 is going to mean a lot more than it would on even Tuesday or even Thursday, right? Because on Thursday, an hour before equities opens, you have at 8:30 unemployment claims, right? And I like to utilize those as a lot of setup news events. So it's something where, I like to have that play out, and that's something post news an hour later, identifying, all right, where's that hourly candle right now at 8:30 when the unemployment claims gets released, and then at 9:30 equities open, what is that new hourly candle start to look at, and kind of using what Henry kind of went into depth this week about with the whole accumulation, manipulation, and distribution, and being able to utilize that fractally on higher time frames and understanding how candles are actually being printed real time. And then obviously 2 p.m. Powell speaking again. I would really like to utilize the Wednesday AM session and the Thursday PM session this week if I were the one that was, trading, which that's something that I'm going to be utilizing this week. Right now at face value, a lot of my attention goes towards the Wednesday AM session and Thursday PM session. But note that there obviously will be trades, Tuesday. There will be trades Thursday AM session and obviously Friday. And I've grown on Fridays actually. I think with experience and if you can really understand what you're looking for and what you don't want to see and what you want to see in the market, Fridays are honestly, they can present great days to trade because you have 90% of that chapter of that week already written and the story has already been told. So with regards to potentially having some, low resistance liquidity runs, Fridays are great, but obviously that it doesn't always offer the correct thing. So Fridays can be hurtful when you try to force certain things. But if you're very confident in your model and you understand exactly what you're looking for, if that does unfold on a Friday, don't be hesitant to take the trade because you have Monday, Tuesday, Wednesday, and Thursday's price action to back up whatever it is you're looking for. So sometimes Fridays can be a really healthy, good day to trade. Although there obviously are some days where it's dependent on what Monday, Tuesday, Wednesday, Thursday does, right? If those higher time frame objectives have already been complete going into Friday, you can kind of maybe not get what you expect out of a Friday, and it can be very consolidative. It can pull back into the weekly range and all that stuff. But if you go into a Friday and your weekly objectives have not been hit, I think Fridays are one of the best days to trade because you have that ability to then go and still get on the side of tackling whatever liquidity is still being targeted on higher time frames. It's Friday, so you've only got a certain amount of time left before the market can deliver into that. And like I said, you've got Monday, Tuesday, Wednesday, and Thursday already printed for you. So there's so much more narrative to understand rather than trying to trade on a Monday when there's really no price action to be presented, or even Tuesday. Not to say that obviously Tuesday, Wednesdays, and Thursdays are the best. It's just something to keep note. I will go ahead and if we have any questions here, I will answer them. I don't think we have any questions. Y'all are pretty good with the news. I will go ahead and get into the charts. Okay. Dollar on a monthly. Dollar on a monthly. Couple things to note on a monthly really quick. So prices obviously had a little bit of a setback with going higher, and that's perfectly fine. When I have a week where price doesn't fully meet my expectations, one of the best things you can do is just reset your chart, go to the highest time frame you can, and really work your way down. And just kind of it gives you a good reason to kind of just get a clean slate on your analysis and your markups, right? I'm a firm believer that if you are dialed in on price and it's going in the manner you expect it to, by all means, keep things on your charts and whatever the case is. Understand what you were looking for and what you had set up. But then now, if it doesn't quite cater to that, kind of reset everything, go to a higher time frame, adjust, and see really where we're at. So a couple things to note. First thing is going to be this monthly BISI that was created in the month of September, right? We've now delivered into that, right? And we've delivered a little shy of the consequent encroachment, but we are also this is 1 week into the monthly, right? So a couple things to note there is that we are only 1 week into this monthly candle. It's still very new, right? Still very new. But I want to also note last month's candle, and I want to look at this wick, right? I want to look at this wick right here, and I want to note the consequent encroachment of that wick. And notice how when we opened, we pushed up into it, and that's where we found that high so far this month, right? Right in here, right? Obviously, we are in this monthly SIBI also, but I really want to note that, when price got up to there, that was around the same level of that weekly rejection block on the consequent encroachment side of things, where we were saying, okay, do we get closure over it? If we do, great, we could go higher. We never really got closure, and that kind of lined up with this monthly area, and I'll show you guys on a weekly too. So we did push into here. I'm curious to see how we deliver, if we deliver lower into this consequent encroachment, right? If we do we find a low? Do we fully fill it in here? So this is kind of my main area of knowing that where are we currently in price? Well, we are currently in a monthly BISI, right? I have to understand that. So even though price didn't deliver to my buy side, it's okay. It doesn't necessarily mean that I'm not bullish, and I'm not going to say that I'm as bearish until we get into some things on the higher time or lower time frames. It's just one of those things that you have to see how it plays in and around something like this, right? Because it's a monthly BISI and we haven't even gone to the lower half of it. So technically, right, if we're still bullish, it can still very easily go higher. Another thing that I want to note is this volume imbalance right here, right? I want to note this volume imbalance. I'm going to take the midpoint off of that, right? We've got this volume imbalance that has now been offered buy side and sell side, right? So I'm curious to see where that plays. And then one last thing on the monthly that I'm going to look at is this consequent encroachment of this wick right here, right? This wick right here, right? Same way we utilize this is the same way we'll utilize that, right? And if it's something where when price trades back up into that area, right, how do we respect it, right? Do we use it and go lower, right? Do we use it and go lower? Or do we actually have a willingness to come out of this BISI on the monthly with strength? And do we actually come through it and use it as support, right? So those are really main things that I'm looking at on a monthly. When you go into a weekly, right, same thing, right? This was this rejection block that we were looking for, and we were talking about closure, right? Closure was the main thing. I know you guys heard me say it time and time again. Notice how we tested that area 3 different times, never got closure above it, right? And that's why I was never fully, that had to happen before any of the buy side got taken, right? And that's why it's so confident, or that's why it's so, clear to me when you're identifying a liquidity pool, you want to have an area that you're viewing in the form of some form of PD array that you want to kind of get closure above or below, depending on whether you're looking at buy side or sell side. You're wanting that to kind of fail and invert while you're going in the direction of your liquidity. So obviously my buy side liquidity was up here, and I was wanting price to get closure above that, and we never did, not even on the daily, and we'll get to that. So as we kind of come down here, right, this is a reaction that you can't take lightly, right? This is something where I do think that we could potentially have a high end right now, leading into the back half of the year. This is a very significant candle, and you can see a little bit on the weekly, but more so on the daily, how and why we started to get into that seek and destroy template on higher time frames. So we are very overextended still. We never really got a full retracement out of any of this, right? It was very kind of level-headed. You can see almost the entire move was just up closure. And even if I just look right here from this low to this high, right? in the bigger grand scheme of things, right? If this monthly BISI kind of invalidates itself and you go lower, right? I think that really what we could be doing is on higher time frames, we could just be delivering into a higher time frame form of discount. And I also want to note that there's a breaker right here, right? So we have this monthly BISI, but then right below it, we have a weekly breaker that's at the equilibrium of the range, right? So I'm keeping this in mind, right? I'm thinking that we are kind of retracing, and I'm not in as of a rush to see buy side be delivered, right? There isn't really a whole lot going on here though, right? You have a tiny BISI right here. You got a tiny BISI right here. And then other than that, there's really no other in the form of inefficiency on the weekly. There's really nothing in here. So I've got my eyes on this monthly BISI, I've got my eyes on this weekly breaker, I've got my eyes on this weekly range, and then really I'm going into the previous week's candle, right? Going into this previous week's candle right here, and same thing. Let's delete all this stuff really quick. Right, when I go into this, I want to note the consequent encroachment of that, right? Really trying to hone in on that area, on that monthly volume imbalance, and understand that this Wix consequent encroachment is inside of that. So if we pull up, how do we react, right? Do we react to go lower? Something like that. Or do we get back above it and use it as support, right? And then go higher. Something I'm looking for on the weekly, right? Because in reality, with regards to this whole price move up, if we still are technically bullish and this is just a retracement lower, this could be used as an order block and you could just wick lower and we could get a heavy recovery off of it. And I would be viewing this as a potential weekly order block if we are going to still go into here, right? If that is still in sight. Going into a daily, right? There's a lot more going on a daily that I'm kind of looking for. Obviously, this low right here was this low was the area that I was wanting to kind of hold for our intermediately kind of bullish perspective. And obviously you can see we ran through that this week. One main thing on the daily is this gap right here, right? This liquidity void, right? There's no price action that's been traded through at all here. Price is imbalanced in that on that side of the market. So whether or not that's a this year thing or a next year thing, as we're kind of getting on the back half of the year, right? This could be something that happens very early going into next year, unless we do get a very clean delivery higher soon. On a daily too, if you look, we've got imbalances in here, right? So you've got an imbalance right here. And if I look with regards to this range, right, from this low to this high, right, we're just now delivering into that discount too. So even though we haven't delivered into the higher time frame discount, right, this could be something that we could also start to note too, is we are in some form of discount, and we do have a couple pools of liquidity to kind of follow through here, right? This one is still open, right? If I actually look here and I do this, this is the open-ended liquidity for this gap, right, in here, right, this darker shaded area. So with regards to this area and this area, right, you've got daily BISIs that need to be filled there. I think that that's where we could be heading. Really nothing here. It's not until you get to like a 12-hour and a 4-hour where you can start to see potential breakers, right? We do have the area where there's areas in here where there are potential areas for bearish breakers, and we now are starting to get some displacement through them. So if I go into a 12-hour, right, you have a high, a low, you take out the high, you displace at the low, right? You've got two breakers inside of each other. So you've got one breaker right here, right? High, low, take out the high, consolidative, never took out this high, and then ended up displacing at the low. But then inside of that, you also have this breaker, right? You've got a high, a low, take out the high, you take out the low, right? You could use this as a breaker. Same thing here. You got a high, a low, you take out the high, you take out the low with displacement, right? So there's 3 breakers on this 12-hour that I'm really kind of looking at and understanding as to what could be keeping us from actually delivering higher into the buy side and be more of like just a retracement higher to go lower, would be the idea that one, you've got 1, 2, 3 breakers all in the relative same area of each other. This could be used as an order block, right? You take out a high, up closure that takes out the high, you displace lower and break market structure, right? So you've got this up closure could be used as an order block. Even if this is just the low, right? Even if this is the low, hypothetically, I think it goes lower, but it's in and around equilibrium, right? Wait to see where price forms a low in here, and you can start to find where equilibrium will be. And then you also have on a 4-hour, I believe, yeah, on a 4-hour, you also have this BISI right here, right? That can now be used as inversion, right? You can see price how this BISI, it comes in, invalidates it, is now going to be used as inversion. So even when price pulls up to these levels, there's a lot of premium arrays that are still here, right? You've got a lot of inefficiencies in the form of BISIs that were, right, one right here, one right here, one right here, right? All of these now have been displaced through. So when price pushes back up into it, you would like them to be used as inversion, right, and go lower, right? That's something that I would potentially like to see, right? You can see how all of these lows now got taken. I think that with regards to sell side, right, you could have sell side right here and sell side right here. Because if you look in here, right, this is unfilled, this is unfilled, and this is all clean liquidity that has yet to be taken, right? If you look down in here, this low has kind of been purged, right? So you do have like a kind of an area in here that I would want to see price actually deliver to before potentially going higher, right? I think it's clear that we all obviously still see this, and that's something that I think will be taken in the future. It's just a matter of how long we want to take to get there. We are pushing into the second half of the week. Price obviously was very very unwilling to go higher when it had the chance. Now I think that this is just a higher form of liquidity, and even though that's good in the higher time frames will kind of play to where price wants to go, I also think that it takes longer to get to those areas, right? And I think if we were going to take it within the, last quarter of the year, we would have taken it when we had the chance because we already kind of took internal liquidity in here, right? And I think that this is now just showing us that really with regards to intermediate term structure, we are going to potentially stay lower and leave these highs for a later date until we probably take out this, right? So I think we don't take out these highs. I don't think we take out these highs until we deliver into here, right? I think we need to come take these lows out, fill some areas in here before going potentially higher. We may or may not even get up into these areas, right? If we leave these as like breakaway gaps and we don't really come back into them before delivering down into here, that's perfectly fine too. I think that gives more reason for price to go up because you've just got now this very inefficient price of downside delivery that needs to be filled with upside delivery. I'll also note one thing too on the weekly. Another reason why I still am pretty bullish if I had to actually, I am neutral right now just because we are where we are and we had this turnaround last week, but I am still predominantly bullish, just understanding that this is the only weekly BISI right here. Everything else has been filled on the weekly here, right? So really, if we want to get deep on the weekly, I would prefer us to really just kind of come as low as 104 flat, right? I think 104 flat would be the area where I think price could still make a low and deliver higher. I think if we get below 104 flat, we're a lot more bearish than I think was intended or originated. You've got this rejection block, you've got this breaker, and you've got this BISI right here. So I really think 104 flat is where I want dollar to go, and then I want to see if we can make a low in there, right? If you pull that out on a weekly time or on a monthly time frame, that would fill this entire BISI, right? It would fill this entire BISI, and I think, obviously price hasn't printed that. The wicks aren't there, so you can see that's where price is. But with that idea, I think we could pull into here and pull up, and then maybe start to take all this, right? Because even in here on this monthly BISI or monthly SIBI, right? If I grab the midpoint, we didn't reach it. And you can see the closure has not gone above the 25%, right? So I still think we're going to go lower here, right? I think we're going to go lower here to fill this. And then I think the only way I really remain bearish is if we get below this BISI low right here. If we get below here and we start to have daily and or weekly closure on the monthly, I'm at daily or weekly closure below this low right here, then I really think that we will go lower, right? But right now, right, you've got some inefficiencies in here. That's way down the road, and I don't like looking too far back. But my main idea is, okay, I want to see if we can deliver all the way through this BISI, build this BISI, and then on the daily and weekly, can we stay above it after filling it, right? Can we stay above it and then continuously go higher? If we do get above, or if we do get below this area and still kind of close below it on the daily and weekly, to me, I would say that we would probably start to deliver towards the low. But same thing here. I mean, you've got sell side liquidity taken here, right? Order block, breaker. You just really extended, right? Or really, really, really extended. And I think we pulled up into these higher time frame areas of premium. And I think it just took a couple weeks, right? We had a couple weeks where it was 1, 2, 3, 4 weeks back and forth where it never really showed us too much with regards to closure. And this week we finally got some closure, which I think gives us a little bit of insight into, where we could go with regards to direction this week, the next week, and the next couple following weeks. So on an intermediate term basis, I'd like price to go lower down into potentially 104. And then on a higher time frame set of things, talking about months, I still would like to see us potentially come higher. Any questions there before I give it off to Henry? All good there? Marcio, you're good. I got your hand.
Thank you. So if I understood correctly, you like for this month, you feel that DXY is likely to be more bearish, and also with seasonality and the typical Santa rally that everyone speaks. So it seems that you're looking for lower prices for DXY and probably for next year is that buy side that we were been talking for weeks now, right?
Yep. I think you are right on spot. And if I even look at this, I'll even kind of get a clear picture of the whole year right now, guys. So hold on, let me go find January. January was right here, right? So January is right here, right? You can see we come down, we come up, down. We're kind of playing in and around the open. We then manipulate down in July and then expand higher going through July into October. I think we're just retracing into this range again. And I think we're kind of just now in an area where we can pull back into not necessarily fully the open, but if I'm looking at this as like from a candle perspective, right? You have the open, price made a low, price made this high, and we're kind of in this idea that, let me put this over here, hold on. Right, and now we're kind of just like right here. So I'd really like to see if we kind of close the year. It wouldn't surprise me if we close the year kind of maybe in and around this busy, but I would like us to be sensitive to the open, right? Because if we are bullish, when price pushes back down into anywhere around this open, right, I would like us to be sensitive and go higher because of how we've already, accumulated, manipulated lower, and distributed higher. Now I think you're just in that retracement of this entire July to October run higher. We were talking about it a couple weeks ago in here where we were like, price can't go in one direction forever, even though it went higher with regards to weekly up closure 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 to 13 weeks higher. Every single week we went higher and had up closure. And like you said, right, at some point you're going to start to get that seasonal tendency switch. And I think that, the back half of this year, going into November and December, I think solely serves a purpose of just retracing into this area right here. To me, I think that where we start to stop retracing lower would be 104. I would really like it to be 104. So I would really like to see price find maybe a low in here and between 104, no lower than like 103, and then kind of start to go higher and close the year somewhere in here. To me, I don't think we go above this area, and I could be wrong. I don't think we go above this area for the rest of the year. I think we stay in this range. I think we potentially find a low in here going into the new year, and I would like to see price going into early next year go higher. This is kind of overall what I would like to see with regards to dollar going into the back half of the months into the new year is really something just like this. But I don't think that we close outside this. I think that this could be a January or February candle. I don't think that this will potentially unfold this year. And I could be wrong, and if I'm wrong, I'll know before we get there, because price will show me, whether we deliver below this or if we can show some willingness to go higher. But I think that this picture right here paints it very clear as to where I see price kind of going in the coming weeks. Any other questions?
Go ahead,
Yes,
Ismail.
course. I have a question with regarding to the data ranges, because I was watching two videos of ICT. One, he was talking about when you get that structure shift on the daily, you go to the month before, and then you mark out that day. And in another video, he did it like, let's say for example, we got the shift this month on let me get the exact date. It was the 3rd. So do you go back to the 1st of November, or do you draw that line from somewhere in October to get your 60, 40, and 20?
So I really, personally, I would say for me, it's where the low is. So I would go into where that nearest swing low is. But theoretically, from a swing point perspective, the swing low would have been this low right here. It would have been Tuesday, October 31st low. Because this is technically a swing point because we took out a swing point. So you have this swing low and this swing high, even though obviously something like this is a lot more clear with regards to what's most relevant and most recent. This is technically a swing point. It's a very not clean swing point, but you had a swing high in here. Price delivered into an area of discount with regards to its range, right? So really, this 3 candle pattern right here is a swing point. It's just super, super ugly. And so really, I would say the Tuesday, October 31st low, that is where I would kind of start my look back, would be on this candle.
Maybe I need to go back to watch it again to understand it correctly. So you mark it from wherever that low is, not where we broke the structure.
So technically we would have broken the structure at the low though. Maybe I'm hearing it wrong, because technically the low of the candle is 105.906. Technically, when price delivers below it, that would be. Are you saying like with regards to the closure?
With regards to like, I thought it was when we break structure, not when the date of the low was taken. You know what I mean? Like you're marking where the structure was, which
I see what
would
you're
give us October, but I thought it was when we actually break the structure, we go back to this month's.
So you would be utilizing this candle then, because that's the one that which we broke. Like the day. So you're saying like, is it the day of the low that's broken, or is it the day that we break the low?
Yes, for me, I understood it where we broke the low on November 3rd.
Yeah, right here. Okay, Henry, what do
And
you?
then I would go back to November 1st and put out the line and then start my look back. But maybe I need to look at it again, just to watch the video again to confirm that.
Henry, what's your take on this?
I'd have to refresh on that.
Yeah, I'm not
On
sure, and
the
I could be wrong on that. I might have to
exact-
refresh myself.
But
To me,
it's funny where I did it. I put it on November 1st, and the 40-day give us exactly that weekly BISI and that low, which you can see the order block that we reacted to on Friday. It gives us that exact low, and that will mark the 40.
okay,
But I will go again and watch the
I'll have to
video.
rewatch it too. I could be wrong. It's been a while since I've looked back on the look backs, but I will. I'll look. I mean, it's a great question, and I'll definitely get back with you on that because I'll have to refresh on that because it's a valid question, right? With regards to starting that 20, 40, 60-day look back, right? I think it is crucial to understand having some form of rhyme and reason as to where you start, right? Because that candle that you start affects all of the other data points that you're trying to look for. So I think it's a very valid question, and I'll do my due diligence to kind of look into that also.
Yeah, same here. Thanks.
Any other questions? Very good question. Very good question. Let me see. Okay, I think we're good. Henry, you can go into EX.
Person, while you have the XY up, I think just one other neat thing to know is when we're looking at things in terms of power of 3, a lot of times you can use the opening to the low or the high of manipulation. So basically the wick of a candle to form swing projections and potential targets as well. So if you go look at this on a monthly chart and imagine from January through the end of the year as a single yearly candle, which I'm not sure if TradingView lets you look at a yearly candle, but if you mark out the low that was formed for the year so far, and then put your projection from there to the opening price in January.
Let me put my projections out 1 second.
And put one standard deviation on that, and you get very close to the high that was formed up there. And when we see these standard deviations in confluence with another area of importance, like we're seeing here inside the monthly SIBI, that can give you a good idea of potential turning points. Not necessarily long-term, so this isn't to say the dollar can't go higher from there, but it's an area where you could look for a high to be formed in the short term. So it makes sense to have that retracement now coming off of there and forming the closure of what we'd see as a yearly candle.
And I'll show you guys just really quick so you guys can see what I took that from. All right, so I've got from January's open all the way down to July's low, because with regards to January to November, this is the lowest point. That's the opening point. This is the 1 standard deviation, and you can see how we get pretty relatively close to that. Very good thing to know. Very good thing to know. Any other questions, comments, or concerns on dollar? It's going to be. I'm very curious to see how we play coming into the weeks, and I will make sure to keep you guys updated as closely as I can, because you've got, potentially our yearly range set, right? This could be the high and low of the year that we could be potentially have already put it in. It would make sense, right? Because if you go back statistically, this high, for 2022, the high was formed in September, right? And if you kind of start to look to see where high and lows are made, you're not really getting a whole lot, right? In September or in January of 2017, we made that high, obviously, and then came down lower. But I wouldn't be surprised if this is our yearly range, right? And then going into 2024, we manipulate the high because so far, to me, it looks like we will continue to go higher. I think we're just on a deeper, higher time frame retracement. All good questions, though. All good questions. Anything else? Okay, you're all good, Henry.
So jumping into ES. All right, everyone can see my screen. Good.
Yeah, you're good.
All right, so we'll start here on a monthly chart. I'll just take a look briefly at a weekly to show these are the lows we were originally looking at for continuation down into further sell side if dollar was going to go and run out the highs that we were looking at, where we now have relative equal highs up there. We're not seeing that right now. We're instead seeing price dip into the discount side of this weekly BISI right here, and then moving nicely off of there. You can see we never even got closure below the sell side right here, which was another indication that we could have that start of a retracement into this some of these higher inefficiencies on the daily chart. This was not the expectation, and we talked about in last week how ideally we saw this Tuesday high from the previous week hold if we were going to continue working down into sell side. But I'll talk about how, after we go over the higher time frames, I'll talk about how each of these days was giving signatures that showed that we could potentially see higher prices the next day based on a closing basis. Okay, so I'll jump into that in a second. And now, just as you see that we're reaching above all of these premium rates that we discussed, right? These SIBIs right here, Tuesday's high up there, the breaker on the daily, high, low, higher, high, and then these SIBIs right here, and the volume imbalance as well. Reaching above all of those on a closing basis, that points us in what direction? It points us toward the buy side, right? And you can see all of this is just showing bullish order flow on the daily chart. So it's not to say that lows down here cannot trade at a lower point, but just like we talked about on DXY, we're getting into the closing part of the year, and it makes sense to have a return back into the range that was most recent, right? Dollar's been moving higher, indices have been moving lower. We're getting into the back end of the yearly range, and so you typically see a retracement in to reform the closure of that candle, right? So now ES working back up toward the buy side. This is kind of what I'd have in mind right here. And we talked about that 4-hour chart that I posted in First Hand Social as well. And you can see here pretty clearly a market maker buy model, right? Your original consolidation here, your distribution down. Here's your smart money reversal, low, high, lower, low down there. Your low risk buy in here, first stage of distribution, and then your second stage right here. So we drop into that BISI, running up there toward the highs, relative equal highs, right? Up there. So I'll go back to the monthly chart and just point out what a couple points that I'm seeing here. This is that monthly BISI that we were looking at back in September to see if we got closure below it to reach down to the sell side, right? So this candle's high and this candle's low, marking out that low and the high and the midpoint in between. And you can see we got closure below, just barely below it in September. And then we saw October reach up back into the premium side of it and then drop down into the sell side right here. And now, with the expectation that that we had before of prices going lower down toward these relative equal lows that we saw on the weekly chart, right here, we could expect this to act as an inversion fair value gap and trade down to those lows. You can see how on Friday we closed nearly, or not closed, but we put a high in nearly at the consequent encroachment of that monthly BISI, right up there. Also right around the consequent encroachment of this monthly wick right here. So reaching up into some of those premium arrays. And now we're kind of back into what I'd see as the midpoint of this range. I just mark out consequent encroachment, nearly back into a premium. So it makes sense for price to trade down and then to work back into a premium, right? We're going from a discount, a low sell side, back into premium. So I'd keep an eye on this midpoint of the monthly BISI here and see if we fail to see daily closure above that level, then we could work back down into some of the arrays on the daily beneath us. But if we do see daily closure above this consequent encroachment of the monthly BISI, then my eye would immediately go to the buy side above this monthly high, and then the high end as well of that previous monthly BISI. So I'd be watching that 44.30 and a half level and 44.59 and a quarter. If we do see daily closure above 43.93 and a quarter, which is the consequent encroachment of this BISI. Okay. On the weekly chart, you can see on Friday, we made a high right up into pretty much exactly the consequent encroachment of this weekly wick up here, just a couple ticks off there, and reaching back up again into this SIBI on the weekly chart between this candle's low and this candle's high. And so now looking at that as another premium array, similar to how we're looking at the monthly BISI, if we do get daily closure above that consequent encroachment of the wick, then we look to the next premium array, which is buy side above these equal highs. And then above that, you can see consequent encroachment of the weekly SIBI. And then if we do really start to get extended, if the dollar starts to come off that low, get closure below the monthly BISI that Carson was talking about, then you could potentially see some extension up toward the high end of that SIBI, right? So up toward 44.94 if we really do start to see that push. Jumping down to the daily, I'm just gonna get rid of a couple things there so it's clear. Now you can see we're trading above all of these premium arrays that we were expecting to act as a premium and for price to trade lower off of. We're back above the bearish breaker on the daily, and we're above these SIBIs now, and reaching back up into that weekly SIBI. So now I'll just be keeping an eye really on those premium arrays that we mentioned on the monthly and weekly chart, and looking for if price does get a daily closure above, then looking to trade up into the levels remaining up here, right? We got the buy side above these relative equal highs that we saw in that 4-hour market maker buy model. And then here, there's a piece remaining of this SIBI, right? Whoops. So you can see here in October, we traded up into this daily SIBI right here, but did not completely fill it. So what I'm working out here is I'm including this SIBI up here and the volume imbalance, and then I'm reducing the inefficiency to the part that's already been traded to, right? So now I'm looking at this as the inefficiency, where previously it would have been this area. We've got these two inefficiencies stacked and the volume imbalance. Now, since it's partly been traded through, I'm interested in that area. So if we deliver above the buy side right here, this is the area that we can trade to. And now you'll want to take your fib and put it on that low. Instead of putting it to here, you put it to this candle's high. And you get the consequent encroachment of that, which is right in line with this volume imbalance right here. So my expectation would be if we do get the daily closure above that monthly SIBI consequent encroachment, Then we could trade to buy side next. And where could we trade above the buy side? We could trade to the midpoint of that inefficiency, which is in line with the daily volume imbalance, which is yet to be redelivered to. Okay, so 4,446.5. Okay, and then as we work toward that, just keeping an eye on the arrays beneath us, right? So now you have all of these inefficiencies which were left behind, but you can also see potential inversion of what we were looking at as premium arrays before, right? So now you have this SIBI, this volume imbalance here, and you have the bearish breaker. Okay, so now you could potentially, if we don't just see a quick run right to the buy side, which is possible because if we're looking at this as that market maker buy model, as you get close to the lows or highs of original consolidation, typically you want to see a quick run because the algorithm is in a hurry to reprice here and not allow for the liquidity that would be placed here in the form of buy stops to be moved, right? So it runs quickly, and liquidity can be offered there for smart money to exit any long positions that were accumulated down here under sell side. But if we do get a retracement in, then you could see something down into some of these discount arrays before working up toward it, right? So now we have potential inversion of the bearish breaker, and watch this SIBI here as well. And when we draw out the SIBIs, include, if there's a volume imbalance to go with it, include that in what you're drawing out. So if you're taking your consequent encroachment of it, you don't put it from here to here, you put it from the low all the way to the body on that volume imbalance. Okay, so that would be your consequent encroachment right there. So now keep an eye on these levels and keep an eye on the buy side as an area to trade. If you do get closure on the daily below this, that's when we can start looking for more discount arrays beneath here. And if we got closure back below the low end of this breaker, then I'd look for sell side again. But as long as we remain above that, buy side is what's in sight now. Okay.
One question I had there.
Yeah, go ahead, Ranjan.
Yeah, where you were showing that the CB on that daily, you were just showing that how to include the volume imbalance also, and then draw the consequent encroachment. Just below that also there is another CB. So we don't take that one because it has been fully rebalanced.
This one hasn't been, well, it wasn't fully redelivered right here. You can see at this point, it was fully redelivered.
Right.
I would look at these really as two separate SIBIs if I was drawing it out. So I would have previously marked that one as like that.
Okay.
Right, including the volume balance and the SIBI.
Mm-hmm.
Since part of it was redelivered already, then I'd mark it like that, above the high. The reason that I included all these together up here is I'm just looking at all the local inefficiencies above this high.
Okay.
So if you looked at this on like a 2-day chart, you get that.
Yep.
See? So it's one single inefficiency.
Thank you.
Yep, no worries.
Henry, can you put the 4 hour and put the regular hours? Because my question is going to be towards that.
Sure. 4 hour.
And the
You want me to put it on regular trading hours? Is that what you're saying?
Yes, please.
Okay.
So
right.
just as you know, as you were mentioning, the buy side, I've been eyeing this end dog that was left, and it's a concurrent with your level of the consequent encroachment 44, 46.50. But I'm just concerned with all these gaps that we just left. I mean, it is in my experience that usually these gaps on futures, they get filled not pretty quickly, but usually, you know, during the same year it gets delivered. So I'm kind of confused. You know, I'm not confused, but kind of hesitant of going long on setups like this, because I mean, you can quickly get into drawdown with all the gaps below. So like how
Absolutely.
based on what you're seeing, so you think that we're probably just gonna reach out to that gap, right? Like to close that gap that is above us, because there is a lot of confluence there, right?
Yeah, so the way I look at it is we're seeing bullish order flow right here. And when we see gaps left without much attempt to go back and revisit them, you can view that kind of in a sense as a breakaway gap, as how I look at it. And what that shows is that price is exceedingly bullish, right? So it's not just moving up and returning into a fair value gap and then working higher and coming back into a fair value gap and then working harder. It's moving and it's leaving these gaps behind without any real effort to return into them. So my eye immediately looks to what's above that it could potentially be reaching to. And that's going to be that buy side that we talked about and the daily inefficiency that we had above it. With this in mind, though, and with and just being cautious of the fact that we are reaching roughly the midpoint of this larger dealing range, that has to put me into a relatively neutral bias on a much higher time frame standpoint, right? So if I'm thinking about this in terms of what could be happening 2 months from now or 3 months from now, I wouldn't be in a position right now where I'd be interested in putting any positions on from that perspective. But if I'm just looking at what can happen on Monday, what can happen on Tuesday, what can happen on Wednesday, I can get a much better idea of what could potentially occur based on how price action is developing right now. You're right, we absolutely did leave a lot of inefficiencies down there that you could see on the regular trading hours, and also just if you look on your daily, all of these inefficiencies below. So could price trade back down into this area? Yes, it could. Do we know if that's going to happen this week or if that's going to happen a couple months from now? There's not really any certainty on that in the moment. So that's good to note those things like you did on the regular trading hours, and keep those levels in mind as areas that could be traded to later, right? Because they're there for a reason. Every gap that's being created is intentional, and the markets are designed to be efficient. So it's likely that we see these areas re-delivered at a later time. It's just the timeline as to how we could return there, which is a bit uncertain, right? And so I would just look at this as price being in a hurry to move higher, not returning to these inefficiencies at the moment. And the likelihood would be that we reprice above the buy side.
Thank you.
Welcome. I'll just touch quickly on the daily chart here, kind of how I was able to shift my bias. I did take a couple trades this week toward the earlier part of the week. And they were all long trades, right? So even though we came in initially with the idea that price was going to trade down toward these equal lows on the weekly, and we could potentially see a return up into some of these areas and then work back down lower, what gave me the idea to start looking long is a couple things. For one, this candle, which ran out liquidity down here, did not close below sell side liquidity. That immediately tells me that if the next candle does not close below there, we could potentially see a retracement up into these areas. On Monday, we press up into the first SIBI right there and close inside it. So that's fine. That can trade up there and still trade lower going into the remainder of the week. But on Tuesday, we trade up higher into the volume imbalance and close above the high of the volume imbalance. That's telling me now that I'm now getting closure above a premium array that I was expecting to potentially work as a point where price could reverse and go back lower. I'm now getting that closure above. The next candle opens inside the volume imbalance, drops down lower, and where does it make the low? Look at the wick, midpoint. There's your consequent encroachment, right at there. Drops right down in the consequent encroachment, and using the power of 3, open, low, the high, and the close. So above here, above the volume balance, I can now look for consequent encroachment of this SIBI, including that volume imbalance, right? So like that, I can look for that level, and I can look for the high end. And then you see on Wednesday, we trade and close above both of those levels. So that immediately makes me a little bit less, or a little bit more wary about how this breaker may act. Okay. Initially, we were thinking if price does come all the way back up to the breaker, we could see that area be responsive, not trade above Tuesday's high, and then go back down lower. But we're seeing all of this closure above these premium arrays with no real effort to come back into a lot of discount arrays, right? It's not trading very deeply into anything beneath it. Here, just to the wick consequent encroachment, and then running higher. Here on Thursday, now opening with a volume imbalance, not trading down at all, just remaining inside the breaker and then working up toward the midpoint of the breaker and the high end. You see we close straight through the midpoint, close through the volume imbalance, close through the SIBI, and where do we get closure on Thursday? Exactly at the high of the breaker. Okay, 43.35 and 3/4, closing exactly at the high. So then that just tells me in Friday's action, at that point, it's pretty clear that this is operating inside a market maker buy model on the 4-hour chart. And that's why on Friday, where you could oftentimes look at something in terms of the TGIF setup. If a higher time frame array is hit, you could look for on Friday for price to potentially make a retracement into the 20 to 30% of the range. But given the action that's here and the closure above all of these premium arrays, and with this in sight, there's no reason for that to happen on Friday. And so instead of price returning into 20 to 30% of the range, we can just see a continuation on Friday for a large range week and continue to work up to the buy side up there. So I have one trade I can show quickly from Wednesday. I actually took it on NASDAQ, not on ES. But the idea is that we're getting closure above the volume imbalance on Tuesday, dropping down into the consequent encroachment of the wick. And then that's showing me that we could potentially move higher into this range of inefficiencies. So then I'm looking at consequent encroachment, and I'm looking at the high end right there. So on NASDAQ, you see the same thing here. Tuesday, closing above the volume imbalance right there. And then on Wednesday, dropping down just to the closing price of Monday, and then working higher up toward the consequent encroachment and toward the high end of the SIBI. So I can show my trade on that. So this is that volume imbalance on the daily chart. You can see how overnight price accumulated, made a high here in the London session, then dropped down below Asian session lows. So we have, and that's your midnight opening price right there. So that's like the day's open, accumulation, manipulation under Asian session lows, and then distribution working up toward the highs. As price drops down here on the 15-minute, we've now seen closure above the volume imbalance. So now I'm expecting that as an area that can act as inversion to trade higher. And we're dropping down into the consequent encroachment of this BISI on the 15-minute. Coming over here to this chart, just like we can see all of this within here as accumulation, manipulation, and distribution, this is all fractal, and we can see the same thing occurring just within these couple candles, right? So just these two candles right here and the wick on this candle right here make up this price action right here, where we see accumulation, manipulation down below the lows into an inefficiency, which we have here on the 15-minute chart. And then we can have distribution back up into the buy side. So I see that, and then I can look for right here, which is a premium array on the 1-minute chart. Oops. This might be a bit quick, so I'll try and walk through it slowly. 1-minute chart right there. We're trading above it. I'm using it as inversion to trade up toward the buy side. So since I'm looking at this as accumulation, manipulation, and then distribution through the highs, I'm not expecting this to act as a premium array to trade lower. Instead, I want price to trade above it and then use it as a discount array to trade higher. And so you can see we drop down into it there. I take my first position, adding more in the 1-minute BISI. I wish I could slow this down, but it's a bit quick. But I'll show you at the end. I have a screenshot at the end where I can show you the entries. So I'm pyramiding inside of there using the wicks and using that larger array. And then you can see how I marked out accumulation, the manipulation, and then distribution. At this time, we're still working against the original idea that I had for the week, which is price moving lower. So I'm a bit quicker to take partials and to move my stop, because I'm not, as we see later in the week, price continued to work higher, but there was still some level of uncertainty about that toward the beginning of the week. And so if I don't feel that I'm completely on sides with the higher time frame bias, then I don't want to be holding a large portion of my position for higher targets, because we could potentially just see this act as a stop run and then work back down toward my entry. So I'm a bit quicker to take partials, the majority of my position off right here, and then just let the remainder of it run to my higher targets. So they're working up toward the midpoint of, this is a 1-hour SIBI that I had marked right here. And now you can see I'm keeping my stop below this wick. Now reaching up toward right here. This was a daily SIBI, I believe, taking a partial at the low end of that. And now I'm using this projection as a fulcrum point. So I'm taking the low to the high of this accumulation, projecting 1 standard deviation, and that's where my final exit is. Here, stop remains below the BISI. Then we have a stop run right there, so I trail below that. Now looking at that as a breaker. And at this point, I'm fine getting stopped out, right? Because I've already taken the partials along the way. Price remains inside the wick as the breaker, low, high, lower, low. And this is all just time distortion and then delivery up toward the buy side. Right. So here, you can see all those entries inside the inversion SIBI from the 1 minute, working up toward the buy side, and then working up toward the 1 standard deviation. And this continues to go on the day, which is fine. But I took the piece of move that I was looking for, right? On the 30-second, you can see these pyramid entries occurring inside of there, and then the final one here occurring at the midpoint of this wick. And then that's a 15-second chart. So here on the 15-second, you can see this last time close candle as an order block, working out the mean threshold, and that's where that final entry is right there for pyramid. So our exercise this week, and we'll jump into it in just a second, focuses on finding an opportunity to pyramid. And what you can see in here is that my first position was the largest, and the positions after that were only adding a single contract. So the first was 3 contracts, and then it was 1, 1, 1, 1. So I'm not building up a larger and larger position with 3, 3, 3, 3, because that's multiplying my risk on the trade. But I can take an initial entry, and then I can take smaller entries to follow it up as order flow is supporting the idea of my trade.
In this particular trade, were you risking just below that inversion CB, the IFVG plus, which would act as the support? So just below that was your risk
My risk
initially?
was right here. So this is the inversion
Yes.
CB, and I'm allowing for it to trade all the way to the low and to wick a little bit past the low. So my stop just goes below this BISI.
Okay.
And this portion from this low right here to this high, where you see the CB and the BISI overlap, is the balanced price range. So you really, if price is going to remain heavily bullish and trade up to here, you really shouldn't see price trade below the midpoint between this candle's high and this candle's low, because that's where the two overlap, right? This CB and this BISI. It can wick a little bit past it as a mohawk. It could even trade down to the low end of it and still work higher. So I'm allowing for that, but the stop could even, if you're being very particular about it, the stop can even be traded a little bit higher than where I had it. But I'm allowing for that to trade down there. And the stop remains there even through my pyramid positions, because my initial entry was not the full risk that I was allowing on the trade. It was only less than half of the full risk that I was going to allow. So it was fine for me to pyramid in there, keep my stop the same. And then as we started to move higher and create more discount arrays that I could expect the price to trade off of and work higher, that's when I can start trailing my stop up.
Got it.
Cool. That's pretty much it in terms of the indices. Same kind of idea with NASDAQ, right? We saw the closure above these areas. Looking at that on a 4-hour chart, market maker buy model. So looking for the buy side as well up here. And then I just will note one thing on NASDAQ. If we were to get really extended and dollar was to drop off through the low of that monthly BISI and keep working lower, there is a volume imbalance up here on NASDAQ on the monthly chart. This is a pretty high reaching target, but you can see NASDAQ dropped down, didn't even reach to the consequent encroachment of this monthly BISI, and is working back higher. So if you see daily closure above the high end of this monthly BISI here, then we can see buy side. And if we start to get really extended, we could work up toward that volume imbalance that hasn't been redelivered yet. That's pretty much it from me on the indices. If anyone has any last questions, we can talk about that. Otherwise, we can go into some of the reflections from the week 11 exercise and then talk about this week's new training exercise. All good here?
Good stuff.
All right. I'll pass it back over to you, Carson, if you want to pull up the...
You want me to go over the...
We can go into week 11 first and then talk about this current week.
All right. Okay, you got my screen?
Yeah, all good.
Okay, all right. So over the past 2 weeks, we have not had any actual training exercises. We've actually been wanting you guys to really just reflect on the past ones. This week's assignment was different than the past. There will be no trades. We have given you guys 10 straight weeks of assignments, so we wanted you guys to really do some deep reflecting, and we wanted you guys to let us know the following, right? What's the total percentage gain or loss since the inception of the account? What are 3 things you learned from the first 10 weeks of the exercises? What are 3 things outside of trading that you believe is affecting your trading? And 3 things you intend to change to better your trading, and 3 limits you want to test in your trading. So we'll just go down the list. Henry, total percent gain or loss since the inception of the account, 0.4%. Down with a couple of missed exercises and a focus on loss and mitigation from the initial drawdown. My focus was on other accounts during the majority of the trading day most days. So I'm pleased with this outcome overall. As we move forward into new exercises, I'm confident I will see more growth on this account given the knowledge and experience I have continued to develop over the last 10 weeks. Right. So main thing is obviously the results might not be where he wants them on this account, but he clearly states that obviously there was other accounts that he was focusing on. Right. This should not be the main thing unless if you have nothing else to trade, you don't have any money in any accounts, whatever the case is. Yes, utilize this as a main focus throughout your trading, but obviously we know other people have different accounts, stuff that has live money, and that's the first things first, right? Is making sure that you stay on track with wherever you are before we even got into any of this. 3 things that he learned from the first 10 weeks of exercises is to execute without hesitation when my model presents itself. Losses are insights to support a future profitable trading opportunity, and expansion takes time and often requires deeper retracements than desired. Accept that and allow for it. Stop management should be minimal to allow for the analysis to play out. Trust it and let the trade work itself, right? So those are 3 things that he learned from the first 10 weeks of exercises. 3 things outside of trading that you believe are affecting your trading. 1 is personal relationships. I have found at times that when I'm dealing with challenges in personal relationships outside of the markets, I cannot bring my best self to the market, and I am best off just sitting out. Number 2, exercise, right? When I am consistent in finding time to get physically active, I come to the markets with a more alert and focused mind. A lack of exercise leads to sluggishness. Discipline is a practice necessary outside of the markets too. And 3 is meditation. I have been practicing meditation daily for over 2 years, and this has been one of my greatest factors in my development. Self-reflection and self-awareness are key to compound growth as human beings and as traders. The daily practice has given me dedicated time to focus on these things. I have a very simple style of meditation. I do not force anything. I do not try to push thoughts out of my mind. I sit quietly and I accept the presence of any thoughts I may have. I acknowledge them and welcome the opportunity to develop solutions if necessary, or to simply let things be. 3 things that he intends to change to better his trading. 1 is prioritize high quality sleep. I get enough sleep each night, but there are some sleep habits I would like to implement ahead of sleep to improve the quality of my rest and improve my focus and energy during the day as a result. Number 2, get a sweat every day. I sometimes struggle to make time for exercise when my daily schedule is filled with time in the markets and working on content and improvements for the first-hand community, but making the time is something I will be making a priority. Number 3, lean into my analysis. I find that the majority of the time, my read on the draw on liquidity is correct. I just need to submit the time for it to pan out. I have pressed into this the past couple weeks, and it has paid off, pushing me out of my comfort zone and opening up the opportunities for larger trades. 3 limits that I want to test in my trading. Participating in the full daily range. I've reached outside my comfort zone recently on this, holding trades through deep retracements for 3 to 4 hour trades. I am continuing to push myself in the direction of being a participant in the lines portion of the daily expansion. Number 2 is building a larger position through pyramiding at different stages of market maker models. I am working on being able to buy or sell the low risk entry and then add more for the first and second stage of accumulations or distributions, and hold the majority of the position for the original consolidation target. With proper pyramiding and stop management, I can build much larger positions without adding more risk to the trade. All right, and he added 2 other ones. Swing trading a small piece of a position for the weekly range. And then a bonus one is to put a greater focus on reflection and data collection. I want to continue tracking my results in a way that is clear and useful for recognizing areas of improvement and displays a long-term track record for success. All good things here, right? Good job, Henry.
Thank you.
All right. Next one. I believe this is Ismail. Total percentage gain or loss on the account, 0.6%. 3 things he learned from the first 10 weeks, 1%. 1 high quality setup a week is more than enough. 1, I know how to get out of drawdown. 2, I know how to get out of drawdown. 3, I'm not analyzing the market with a clear mind right after taking a loss, so it's better to sit out to the next session/day. 3 things outside of trading you believe is affecting your trading. They need to be profitable, or the need to be a profitable trader now to provide for my family, the inability to stay consistent, disciplined in other areas of life over a long period of time, and not submitting to time, right? I think the main focus too is right here, the need to be profitable trader now to provide for my family. I think a lot of people go through this, and I think the biggest thing, and I've said it time and time again, and I think I mentioned it on mine, you cannot feed others until you have already eaten or ate. You cannot have this idea that you're going to be this big provider or whatever the case is. You can't do any of that until you get you right? You have to submit to the idea that it's going to take time to get you to where you want to be. It's not going to happen overnight. It's not going to happen next week. It's not going to happen next month. You have to submit to that time process, right? And that leads into your third one, right? Not submitting to time. 3 things you intend to change to better your trading. For the first 10 months of my ICT journey, I did not have a rule-based model written out, and I was just trading ICT patterns. This month, I started to create a system and put it down on the paper, and I have rules for which days and sessions to participate in. Number 2, my stop loss does not move until partially secured, unless I collapse the whole trade if I recognize that I'm offsides. Number 3, I understand that my model is going to give me 0 to 2 setups per week. It is the weeks that don't offer me a setup where I usually wreck myself and try to force something. I want to get to a point where I'm completely fine with having 0 trades for the week if the model does not present itself, right? Focusing in on this third one, right? The past 2 weeks, there's been 0 trading exercises, which means you don't have to take anything, right? That's another reason why we wanted to do this, is because we wanted you guys to get that feeling of just not participating in the market, letting it go without you, even if your setup forms, whatever the case is, knowing that you did not make any money or lose any money and you just let the market play, knowingly that there is going to be a time, like we go into this week, where you are able to trade again, right? And there's going to be more opportunities. 3 limits that you do want to test in your trading. 1 is sticking with micros until I'm consistently profitable to lower my risk. Number 2 is journal my thoughts 2 to 3 times a week. And number 3 is how long can I stay disciplined? I proved to myself that I do it for 1 week or 2 weeks and then get back to my old habits. The next few months, this is my main goal, regardless of my P&L. Yes, I think that's a really good thing that you noted, right? Is that everyone can be disciplined for a day. Everyone can be disciplined for a week, but get up again, do it 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 tomorrow, do it tomorrow, do it tomorrow, do the next thing, do the next thing, right? How many times can you stay consistent until you break that threshold, right? Push yourself to those limits. Instead of it being days, let it be weeks. Instead of it being weeks, let it be months. And then start to get in this addictive personality of just constantly showing up and being disciplined. And over time, it just becomes secondhand nature to you, right? But it takes weeks to create that secondhand nature feeling. All these are really, really good. All right, Axel. Total percent gain or loss on since the inception of the account. I'm currently sitting at break even on the exercise because I haven't done every single exercise and because I never risk more than 0.5%. Between loss and mitigation and other priorities and absence, I didn't give the account a chance to grow, yet I'm still happy with where it is. All things considered, most people blow their life savings in the time that I stayed break even with this one. I love that, right? I love that positivity, knowing that yes, you didn't necessarily get the growth you wanted, but you survived, right? You're very well off in the survival aspect of trading. 3 things that you've learned for the first 10 weeks of exercises, right? You learned how to better manage your emotions and mitigate mindless revenge trading. It's not even that I get angry trying to make it back. It's just this absent-minded reflex. I'm still working on this one, but I've made great strides from where I started. Number 2, you learned you learned by proxy how to better manage your own stop losses and not jam them in so tight, effectively removing a great deal of fear from the idea of losing out on potential profits. Number 3, you learn how to get more in tune with the market by properly implementing real-time DXY confluence, and not just at the start of the session, but throughout the entirety of the trade, boosting your confidence and giving you the edge to get out if I see both markets trade in the same direction. I like that you added this, right? That's something that a lot of traders don't really put a lot of attention towards. Oh yeah, it's the DXY, this, that, or the other, but actually really understanding how the DXY is moving with corresponding assets that you might be trading, not just the start of the session or the start of the week, but really taking that and letting that flow in and out of your trades day in and day out, even on the lower time frames. I think that's a really good point. 3 things outside of trading that you believe is affecting your trading, right? Coming to grips with leaving a 10-year career to potentially pursue something that is not only more intimidating due to the industry's infamy of liquidating 90% of its participants, but also because mentally speaking, it's the farthest thing from being a chef that I could imagine doing without any prior studies or background in finance. It's going to be scary, right? That goes back to the whole thing of like the Apollo Creed cutscene or the Rocky cutscene is 2 minutes, but it can be 5 years in real life, and you don't know if you're going to beat Apollo Creed, right? And it's that idea that you want to do hard things that are worth doing, right? And this is something, right? Trying to pursue that. It's hard, but is it worth it? Yes. And why is it worth it? Because you don't know if you're going to do it. You don't understand, or you don't know what the outcome's going to be. It's entirely up to you. But I can tell you one thing. You've probably heard this multiple times where you say, okay, if you give it your best, no matter win or lose, that's the best you can do, right? If you give it your all and you do your best, win or lose, you can sit there and you can say that you gave it your all and you can be fine with that. But I want to add an extreme to that. If you actually gave your best and you didn't do 90%, 99%, 80%, if you gave it 110% every single time and you blew past every extent that you could and tested every limit every single day, and you did all the things that you knew that you were supposed to do, it is actually impossible for you to fail. And it is almost certain that you will obtain whatever it is. But not enough people ask yourself, well, what is my best, right? What is best for me? What is best for Henry? What is best for Axel? What is that best? What is that threshold that I need to test, right? Because you don't really know your limits until you test them. And 9 times out of 10, when you get to that limit and you exceed it, you realize that it wasn't even really a limit. It was more of a mental limit than a physical limit, right? So keeping that idea that if you actually give your best day in and day out, exceeding every single limit and testing every single threshold that you can every single day, mentally, physically, technically, whatever the case is, it is almost certain and it is impossible for you to fail, right? It might take years, might take a decade. The time aspect is not necessarily up for you to decide, but if you can every single day know that you put in 110%, blood, sweat, tears, all of it. You stayed up, you woke up, right? You got up early, you stayed up, you stayed late, whatever the case is, you put yourself in a position to succeed. You focused on your health, you focused on your diet, you got that sweat in every single day. You didn't let the outside chaos of the world disrupt your peace, right? You meditated every single day. You started to understand your inner voice and understood the thoughts that you have and why you have them, and you really listened to them and followed them and acted on them. It is impossible for you to fail. There's this underlying thing that every single person that is successful in life, odds are they didn't half-ass 80% of the time or even 20% of the time. Every single day, every single time they gave it their all. So I love that you said that in your thing. I think that that's something that you can bring with you going in, is that if you give it your all, right? And you might say, oh, I gave it my all, but deep, deep, deep down, you actually truly know whether or not you gave it your all, and know that you maybe have left a little bit left on the field. If you leave nothing on if you leave everything on the field every single day, I promise you, you will get to where you want to be. Number 2 is the need to reach the end goal without having given the process to ample time it deserves, right? It takes time, guys. This takes time. We all want it now. We all want it now. We all want it like it was needed yesterday. You're not going to get it that way, right? It's honestly, there's always going to be this higher self that you're trying to catch. So in reality, you'll never reach the end goal. What is the end goal? And what happens if you do reach it? What's next? Now you're just empty, right? Know that you're never going to reach your end goal. And that person that you're constantly chasing is someone that you'll never actually catch, right? And every time you reach that end goal, you need to fight harder opponents. You need to create a more sustained personality and someone better, and create that person stronger and stronger and stronger again, knowing that you'll never actually catch it. 3 things that you intend to change to better your trading is practice mindfulness and meditation again. It is one thing that I do when things get tough, and it helps out massively, but it's the first thing I forget to do when things get better. I love that you said that, right? This too shall pass. If you're down bad or if you're up high, know that both of them are going to pass, and you need to continuously practice all of these little things when you're in profit or when you're in drawdown, right? Or if you're just at break even. It's something that you need to continuously practice. Exercise more, I agree. Refine my model and my win-loss ratio as better. Wait, refine my model and my win-loss ratio as well as better log my trades. For the most part, I log technicals but neglect writing what goes in my mind, right? Maybe writing isn't for you, right? Create an audiobook. Just talk to yourself. Might sound crazy for the first couple times, but over time, it might be the best thing that ever happened for you. You can take your phone, go on voice memos, and just start chit-chatting at yourself. That can be a way to journal. It doesn't always have to be writing, right? Do something that is of least resistance for you to at least get the action item done. 3 limits you want to test in your trading: 1 million in funding and every discipline associated to reaching that end, right? I like to tell people on this one, don't go for the 1 million in funding. Don't work for that. Work for the person that you have to create in order to get that, because the 1 million in funding might come and it might go, but the person that you build in order to reach that and obtain that goal stays with you forever, right? And will get you even further than just the 1 million in funding. Managing a live account, something that you need to obviously test. It's something that it's needed, right? You need to just not be this demo warrior for the entirety of life, right? Demo's good and it starts and it gets you, it's very healthy to go in and out of that, to understand and test both psychological and technical things. But at one point in time, you got to be able to manage that live account. It's crucial. Because why are you doing this if you can't manage a live account? I think that this should be a main focus too, right? You got to be able to manage this before you can even manage this. And the 2 things that correspond are the person that is actually managing it, right? Building that person. And then number 3 is working with high profile clients and managing their funds. If that's something you want to do, work for it. But 1 and 3 cannot come without 2, and 2 cannot come without a full understanding of who you are as a person and why you operate the way you do. Alrighty, Miss Kate. Total percentage gain or loss since the inception of the account, 3%. 3 things you learned from the first 10 weeks of exercises. You don't need to trade every day, even if you see setups. Higher time frames provide great roadmaps on how you can execute on lower time frames. Number 3 is refining your model can build your confidence and prevent you from over trading. 3 things outside of trading that you believe is affecting your trading. Number 1 is I was traveling for most of October, so it's hard to stay focused and being in different time zones on the go. Completely understand this one. I'm a big believer that if I'm traveling, I'm not trading. It's super hard for me. I have to be very in hone on my environment, and I trade best when I am here rather than just whether it's on a laptop or an iPad or whatever. I like being here, so I can totally see how that's difficult. Number 2 is I haven't been diligent with being active physically, so going to get back into it now that I'm done with my travels. Key. You can see how that's an underlying thing that everyone's really trying to work on, and I think it should always be like that. Super easy to lose track of that, and it's super hard to get back into it, and so you have to fight that. Number 3 is I've neglected my meditation practice for pretty much the whole year. I want to find a way to incorporate it back into my daily routine. I agree. Meditation's key. It can be 30 seconds or 1 minute, or it could be 5 minutes or 10 minutes, as long as you're doing it consistently. Number 3 things you intend to change to better your trading. Without a doubt, the number 1 thing for me is to have more patience to wait for the right setups before entering, and to sit out after a loss instead of wanting to make it back immediately. Number 2 is to choose one model, refine it, and only trade that model for the rest of the year, no matter what other setups I see in the charts. And number 3, having a better journaling process. I've been logging my trades in a Notion diary style, but I think it might be more helpful to put my trades in data tables so I can better analyze them in aggregate. I agree. I think this is key, right? Just because you journal one way doesn't mean you have to journal that way forever. Just like you look at backtest models, figure out other ways to potentially journal and document your data as a trader, physically, technically, and emotionally, right? Try other things, right? Try other things and see what works and what doesn't, right? You might try something, it might not work, so you go back to the other one. You never know until you try. Three limits you want to test in your trading. Learn to hold my trades a little bit longer. Instead of 10 to 15 points, I want to try for 25 to 30 points. I really think that this is something that you could obtain by studying your trading over the past couple months, seeing how you trade as a trader. I think that that is the biggest thing that you need to test in your trading, and I think that you'll get so much value out of it. And it's a little bit uncomfortable at first, but over time you will gain confidence so quickly. You are a very good trader. You understand the markets. I think you just need to get better at just understanding that, yes, you can hold, right? Yes, you can take pieces off, but learn to hold, right? And start with 25 or 30 points, but I even encourage you to even go further than that and go further than that, because I think that seeing you as a trader grow and seeing the way you mark up charts and seeing the way you entry and exit and all that stuff, I think if you just had a little bit more patience and actually tested that limit, I think that this should be the main thing that you focus on going into the back half of the year and into the new year. Because I guarantee you 90, 70, 80, 90% of your trades, not only did they hit 10, 15 points, but they also hit 25, 30 points. And I guarantee you over 50% of the trades that you took probably reached anywhere from 40 to 60 points, right? And that's something that I think that you can really hone in on. And I see you growing in that area very quickly if you devote time towards it. Number 2 is only utilize the 5 minute or higher for entry. I love the 1 minute, but I want to see what it's like utilizing a slightly higher time frame for entry. Go ahead, try it. I think it would be great for you to find out if it's something you can sustain and it might be better for you, or you might realize, no, I really like the 1 minute. Trade the rest of the year without losing control of my emotions, win or lose. Yep, I think it's something that you need to obviously focus on all the time and really hone in on that. Overall, all good stuff here, right? All good stuff here. All right, for me, total percent gain or loss since the inception of the account, 10.7%. 3 things I learned from the first 10 weeks, right? My trade management is a direct reflection of my focus, right? The trade can be right, but the management can be wrong, and all of that is correlated to how focused I am during that, right? And then number 2 is no matter the trade result, after 24 hours, I'm never in the same emotional state as I was during the trade result, right? Keep that in mind, right? If you can just fight those first couple minutes to hours after that and just do what you need to do to not spiral, odds are 24 hours, you're in a total different headspace, right? And then my last one here is when you see your edge, use it, right? When you see your edge and you really understand your edge, use it, but use it responsibly, right? 3, I think this was a lot of the reason as to why I was able to grow it in the manner I was, is because when I saw my edge, I really did use it, right? And I never did it irresponsibly, but I did utilize it, right? What does that mean? It means holding trades a little bit longer than I'm used to. Maybe, you know, putting a little bit more risk than I would if I didn't necessarily feel as if my edge was there. 3 things outside of trading that I believe is affecting my trading. One, and you guys might laugh, for, you know, I for probably the past month or 2, my closet wasn't fully organized like I wanted it to. So one thing that I did, and it's just something that lingers in my mind, I'm very OCD, was getting my closet very organized. I like my closet to be color coordinated. I just don't like clutter in my closet. I need everything to be folded, all that stuff. So I took time over the past week and really kind of organized my closet, something to just clear my conscience there. Another thing was my diet. I made a game plan this prior week, and I'll execute this next week, or really getting my diet in shape, right? I think, you know, there's a saying that your gut is your second brain. And I think if you have an unhealthy gut, it can create to an unhealthy mind. And I think you get a lot of clarity from your diet. So really making sure that I'm eating healthy, eating a lot. You know, I have a very high metabolism. I tend to lose weight very easily. And so, you know, it requires me to eat a lot more than, you know, the typical person. So I sat down all last week, made a game plan, and now I'm going into, you know, trying to execute it going into that week. I think that helps my trading a lot. And then same thing, kind of like Axel's, right? Fighting the urge to be the person I know I will be, but not allowing for time to take its course, right? I do not have average goals. And average goals, you do not have average goals, it takes time. It takes time, right? I'm very confident, and I know that I will be the person I know I will be, but knowing that it will not be tomorrow and it will not be next week, and it's going to take time and time, right? The bigger the goals, odds are the longer it'll take to reach them, and you have to understand that and submit to that. 3 things you intend to change to better your trading, right? Keep the same current, consistent plan, right? That's the number 1 thing, is keep the same consistent plan that I have, because there's nothing here that I would need to potentially try to push, right? I don't need to try to get more. I don't need to try to get less. Kind of note that what I'm using right now is working, and try not to change too much about that, right? Obviously, there's some things that I'm going to potentially like try to refine and get better, but sometimes when you're doing good and you have exactly where you kind of want to be, it's very easy for you to kind of sit there and say, okay, well, what do I need to do better? How do I get the 10 to 15, or how do I get the 10% to 20%? And really, sometimes it's healthy to just say, I don't need to do anything drastic. I just need to continue what I'm doing. Change little tiny things, but know that what I'm at right now is very good. And if I can keep that consistent, maybe a little bit below or a little bit less, stay in the threshold of where I'm at right now, I'll be perfectly fine, right? That's something that you want to start to know, even when you do start to get to where you want to be in trading, knowing that you don't need to necessarily push for more, whatever the case is. See if you can just stay at that, right? In and around that. It might not be 10, it could be 8, it could be 13, it could be whatever, but staying in that zone and knowing that I don't need to change too much. But one thing that I do want to kind of work on is let the 15-minute and greater show that my stop loss should be moved to break even, not always the 1 minute to 5 minute, right? Really look to see how that AMD is forming, that accumulation, manipulation, distribution is playing out on a 15-minute, a 1 hour, and a 4 hour, and really show that rather than utilizing just a 1 minute, 2 minute, 3 minute, 4 minute, 5 minute to then move my stop loss at break even, right? If you can really match maybe the 1 minute to 5 minute with the idea that the 15-minute, 1 hour, and 4 hour really is showing that AMD properly, yes, then have the idea that, okay, I can take a partial and I can move my stop loss to break even. Don't always be, sometimes I can get really focused in on that smaller time frames, and sometimes it can hurt me. And same thing here, right? Just making sure that I'm always doing it for myself. Even if you can provide for other individuals, you always have to have the mindset that you're just doing it for you. You have to be selflessly selfish, right? You have to be selfish. You have to be selfish. It's so weird, and it's a different mindset. You have to be selfish about this stuff. Even when you are able to provide, I'm constantly only doing it for me, myself, and I. What and who that can provide for later, and what once I can fill my glass full, where the excess of water goes is totally up to me, and I can utilize that, but I have to know that I cannot give out anything until my glass is completely full, right? I have to be able to feed myself before I can feed anyone else. 3 limits I want to test during my trading. Pyramid more when the opportunity presents itself. I want to try trading with no music. I've never really fully attempted this before. I'm really, really big music head. I love trading with music. I think it actually helps me, but I don't know how much it helps me until I try it without it. All right. And so that's something that it might sound funny. It might sound, corny, and it might be very subtle, but who knows? Maybe I get a lot out of it, and actually trading with no music completely helps my trading. Maybe I actually don't do good with it, and I realize that I really am, better off with music. I don't know until I try. So that's something that I'm going to press going into the back half of the year is how do I trade and perform with no music and just me, myself, and my thoughts? And then try to really review the session and trading directly following it, not delaying it for hours or days, right? I'm big on when I trade and I do whatever, there's hours before, I'll trade or do whatever, and then I'll disconnect, and then kind of hours, maybe sometimes days before, I'll go and journal it and analyze it. I really want to get better at really reviewing it, putting the data in technically and psychologically, directly following it when it's fresh on my mind, right? That's something that I want to get better at. Alrighty, Mr. Allen. Throughout my trading journey so far, I learned to value my time and to manage my emotions. These past few months of sharing my trades have served to remind me that one 30-minute trade isn't necessarily better or worse than 20 trades all day, every day, and time saved from limiting screen time is a great reward. I used to have a big ego, making irrational and emotional decisions in the name of perfection. However, admittedly, having to be 100% transparent with this group and having to share my trades and reasons had me thinking twice about pressing the button. As for the things holding me back in anything but mainly trading, there's only one thing. Unfortunately, it's a big one, myself. Once I truly realized I owed nobody anything, I was only left with myself. My giant ego / pride, I admit I'm still working on it, but I at least acknowledge it, had me thinking that I needed to be the best at everything I tried to be. Big wins every day, and my emotions blinded me to how dumb that way of thinking was. Over time, I learned to calm myself and think rationally, especially when trading, and especially in a losing trade. From those exercises, I can honestly take one positive, and I should use. I see myself using stop stops at logical places for better protection. Of course, stops should be coupled with rational thinking. I can truly say that that will help me in future ideas and trades. Honestly, logging trades is not something I find valuable. I don't see much use in reliving mistakes, especially when I typically find my mistakes right after or during my trades. If you find it helpful, great. I do not. The only challenge limitation I can think of is my failures to recover from deep drawdown. Unfortunately, speaking from experience, paper count drawdown does not equal real money drawdown. I cannot find a way to replicate that feeling. That is the only thing plaguing my mind in regards to this. These past 10 weeks, I made a whopping 1%, but I don't feel bad about it. And there are two main reasons why. These exercises taught me how to slow down, win or lose a trade. I have to keep my emotions in check. For me, that meant sizing accordingly, micros for the win, and not revenge trading. I also respect my set stop loss a lot more now. Even if this 1% doesn't feel like enough, the lessons were invaluable, and I have all trades logged and journaled so I can improve my emotions at least. Yes, you know, and I think you made a good point up here is how your drawdown is on paper is totally different than your drawdown when it's real. And unfortunately, this might sound crazy to a lot of individuals, but over time, it is healthy to open an account, whether it's a tiny amount of money or you go for a small amount on a funded account. You go for a small account and you basically go into it with the mindset that you're going to lose, and try to actually put yourself in drawdown and know that yes, it's real and you're going to put money in, and go in with the expectation that you've already lost it all, right? And go into it free will with this open idea that yes, you know what, I want to get in drawdown. I want to potentially lose it all. I want to see what it's like and put yourself in that scenario. So when it is there and it is real, try to, like, when you are in drawdown, work your way out of it. That's something that might take, right? Is actually opening up a very small account, whether it be funded or live money, with the expectations that you're going to put yourself in drawdown to see how you react and feel, right? Because a lot of people, every time you take a trade, what's the expectation, right? What's the expectation when you place that trade? Everyone has the same expectation every single time a trade is taken. We expect to win, right? So as humans, we are constantly, if we're expecting to win and we clearly know that we don't win every trade, it's that trade that you expect to win that you don't win. How do you fight that false expectation when that expectation falls short? How do you fight that, right? How do you have the mindset to where you realize that your expectation that you thought was going to happen didn't play it out, and at the cost of that, you lost money? How do you react, right? Those are all things that you have to start to realize and understand, right? If you have to think of yourself as a scientist, right? And if you're just constantly trying to have this expectation that you're going to be in profit and profit and profit, you're going to have an equity curve that's always going higher, you're going to have false expectations. I challenge you to put a little bit of money, use it as a tax, put yourself in drawdown with real money, see what you do. Maybe you build it out, maybe you lose it all. That's okay. I guarantee you the next day you'll still be breathing, right? Don't put something in that you can't afford to lose. Just like you can't afford, same way, if you risk 0.5% per trade, right? You're risking something that you know you can afford to lose. Same thing with the entirety of the account, right? Whether that be funded or live. Put a very small portion in with the idea that you're never going to get anything out of it. Maybe you do, maybe you don't. But it allows you to kind of create this idea that, you know what? I am not always going to make money in this, right? Especially when you're learning. Every single trade that you take that's a loss, it's not you losing money, it's you paying for more information, right? You might spend $50 on a $25,000 funded account, right? And you might use that as a payment to see how you react with live funds, right? You're not going to buy that account to know that that's going to be the one that makes or breaks you, or that's going to be the one that puts you, full-time trading. No, it's solely a tax to understand how you trade with live money. And then over time, once you understand all that stuff, yes, you start to put money in with the idea that, yes, I'm going to really try to put all things aside and try to trade this and have this be an account that I really try to get growth out of. Going into this week's exercise, we are back pressing the buttons. All right, so we want you to focus on pyramiding this week. Make sure that you clearly identify your initial entry, followed by your pyramid entry. We want you to trade your personal model, and we want you to have obviously an initial entry protocol followed by at least one pyramid technique. And your pyramid entry should be equal or lesser value than your initial entry, right? Just like Henry was talking about on that trade earlier, right? He started his initial entry with 3 contracts, and then every other pyramid entry was just 1. So your pyramid entry should be equal to or lesser than your initial entry. Obviously, most of this will require you to trade micro contracts instead of the minis in order to maintain proper risk management and have at least a 2 to 3 contract position. So make sure that you're using those micros. Same thing as always, we're not really changing this yet right now. Outline your setup, screenshot your journal submission. Be sure to include your higher time frame bias, what time frame you're trading and entering on, and what you're targeting with regards to internal or external liquidity and inefficiencies. Keep the same balance you finished with after week 11. So obviously we haven't been trading over the past 2 weeks. Whatever your account balance is, still trade it. And then here are kind of the goals, right? Take 1 pyramid entry. You are welcome to take more if you want. Any day is available for trading, but do not trade ahead of or into red folder news. 2 trades maximum for the week. If you are in profit, risk 0.5%. If you win your first trade, stop. If you go break even or lose your first trade, you can go back in and risk 0.25%. And if you're currently in drawdown, risk 0.25%. And if you win your first trade, stop. If you go break even or lose your first trade, risk 0.25%. You guys can see that we kind of keeping you guys right here for now. We're not pushing anything right there because it's a good rule of thumb of just if you win your first trade, it teaches you to stop. If you are currently in drawdown, you're risking less than what you normally would risk, right? If you go break even or lose your first trade, we're allowing you to try to make that back and mitigate some of that by risking half of what you're initially risking. Obviously, target a 4-hour or 1-hour liquidity pool or inefficiency. At least 5 handles on ES, 10 pips on Forex, 20 handles on NQ. Obviously, moving break even is welcome, and we always want you to use a stop loss. Obviously, in your journal, we like to see the duration of the trade, the size of the contract, the risk to reward, time of day, specific. Actually, I can go in and edit this. We're not really utilizing breakers unless obviously you utilize them in your model, so we can change that. Specific draw and liquidity targeted, stop placement, partials taken, time of break even, all that good stuff, emotions before, during, and after. So we are back here, going to be trading this week. Something that I'm going to be doing going this week forward. I know you guys like the live trading sessions, and that's something that we are still going to start to work on and see if we can fit that in as time goes forward. But until we actually really get there, I am going to go back to recording my trades. So I might not be able to do live trading sessions every week, but I will be able to record my trades. So we're going to go back into kind of on these calls, having a video that you guys can go, and I'll kind of do a voiceover on it. And I'll do a poll. We don't know if you guys like sped up versions or you guys like real-time versions, whatever the case is, kind of showing you guys a trade recap of, a full-on trade from start to finish, recording and having like a voiceover and talking you guys through it. That's something that I'm going to kind of work on and kind of present going forward. I think that that'll be helpful if I can kind of go back to that. So, Henry, is there anything else here that you want to mention?
No, not much to touch on for the exercise. Just keep your balance the same so we can continue to see the progression over time. Be patient. Wait for your setup. Wait for your model. Right? You don't have to force anything. This is our first week back into exercises after 2 weeks off of that. So don't feel a need to rush into it. You got the whole week ahead of you, and just be responsible. Remember, this is a learning opportunity, and there's nothing to be afraid of here. Ranjan put a comment in the chat about fighting drawdown on a trade and moving the stop loss is something to struggle with. I just wanted to comment on that quickly because this is a good learning opportunity for everyone too. If you're fearful of taking a loss, a lot of the time that's the result of trading with too much leverage, right? Because the loss is scary to you for one of two reasons, right? One thing is that you're wrong, and that's invalidating something that you think about yourself, which is that you should always be right. That's just something that you have to work to get over, right? We're gonna be wrong, and that's fine. There's nothing wrong with being wrong. What's wrong is when you're incorrect and didn't use proper risk management. And even if you're right and didn't use proper risk management, still that should not be a behavior that's rewarded, right? The other thing is you're scared of being wrong because you're risking too much on the trade. And so the way to get over that is go into every opportunity with the absolute smallest leverage that you can use. You're going to be trading one single micro contract on either ES or NASDAQ. If you're risking 5 handles on ES with one single micro, it's a $25 loss, right? That should be manageable for most people, I'd say. And also, if you're trading it on a demo account, then there's no real risk at all, right? But even if you are trading on a demo, you still want to trade with the smallest risk, because this is the act of training yourself, right? If you're trading on a demo and you're trading with multiple minis and you're risking, let's say, $1,000 or thousands of dollars per trade, you're not gonna be able to translate that into a live experience. Because when you go to trade a live account at some point, if you choose to do so, that's gonna be a lot when you're now having actual funds on the line. But if you train yourself by using the smallest leverage, you can get comfortable with that idea. You don't have to be fearful of the loss, because okay, it's very small, it's manageable, and you can recover that. And what you want to do is, if something you're scared of is being in drawdown and feeling like you have to rush or stop, is just put the trade on with your stop loss, accept the risk that you allow for the trade, which is going to be fine because you're going to be risking the smallest amount you can, right? Taking on the smallest leverage, and then put on your profit target, and then just let the trade play out. Start with something small like 5 handles if you're trading ES. If the trade plays out, then do that again. Then the next time you can reach for 6 handles. The next time you can reach for 7. The next you can reach for 8. And you'll have losses in there too, and that's fine, because overall, if you're correct the majority of the time in your analysis, you're going to see that you'll still be able to be profitable with that. And what you're doing through this repeated exercise is you're building a database of proof for yourself. And this is another thing I touched on here in the comments, is that confidence does not come through willpower. Confidence is built through proof, through evidence, right? When you start out trading, or when you start out doing anything new, you cannot expect yourself to be confident in your approach. In fact, you shouldn't be confident, because what reason do you have to be confident? There's no example of success yet. You build confidence through evidence and through proof of something working. And that's why we do things like back testing and then forward testing in a demo environment, is because you're training yourself to see things, and you're building evidence of it working, right? As you build up that evidence and layer that over and over again, okay, I've seen it work 10 times, I've seen it work 20 times, I've seen it work 30 times, and this is my track record. I lost 5 trades, but I won 10 trades. Now you have evidence behind you. Now that supports being confident in your approach. And when you have that build up over time, that confidence, which is backed by the evidence, is going to enable you to take better trades over time. You're not going to be fearful of the loss. You're going to be able to hold your trades longer. You're not going to feel like you have to rush your stop loss up, because you've seen this before and you have a reason to expect a certain outcome, right? Just wanted to touch on that quickly.
That's really helpful. Thanks. Thanks for drawing my attention to that, Henry.
Yeah, absolutely. It's something that takes time, right? This is a gradual process. You can't rush yourself into your goals or levels that you want to reach. You have to just go step by step. Take the small steps and let them compound, right? Just like we're trying to compound our accounts over time. You compound who you are and your own skills and your own understanding by taking the small steps and letting that build over time, right? So stick with it, work toward building that evidence up for yourself, and just like any challenge, you will be able to get over it. That's it for me.
Alrighty, all good stuff. All good stuff. Thank you guys for hopping on. A couple things to just note going into the week. Same thing as usual. We've got our midweek review coming out on Wednesday. Me and Henry are trying to get a couple more types of content out to you guys, weekly. So, we're looking to try to utilize a little bit more short form content as well as a little bit more introductory content. So those are some things that you could potentially see in the pipeline. Other than that, just keep giving us feedback. If there's things that you guys want out of us, let us know. As you go into this back half of the year, I'm obviously a lot less active than I normally would be, but I'm still going to be active, still going to be giving you guys stuff to look from. But statistically, myself as a trader, the second half of November, all of December, and all of January, just a lot more high resistance. I statistically am not as good of a trader as I am, whether it's summer or spring or stuff like that. So the back half of the year is always something that can get a little bit more fickle. So just keep that in mind. As my activity in the markets slowly start to decrease a little bit, know that that's just because of myself, my understanding of who I am as a trader, how I perform throughout the year. And, as you go into this kind of holiday time of the year, note that the markets can get a lot more high resistance, a lot more deeper retracements, maybe a lot more seek and destroy profile templates. So just keep that in mind. Obviously, I'm still going to be active, but just know me as a trader with regards to, live funds and this, that, and the other, I definitely decrease my activity in the markets just because of how I've performed in the past. And that's something that I think you guys as traders should start to track is, depend even how new you are. Once you really start to get this stuff, really understand how you perform at certain times in the year, because just like you might have an edge in the market on certain times or days where you see it, you will have an overall greater edge in the market going into certain times of the year. So that's something that just keep in the back of your mind. Other than that, I'm all good.
Yeah, all set for me too. If anyone has any last questions before we go, feel free to pop on. I will be out of town this next week, so Carson will be leading this next weekend's call. I will see you on the midweek market review, and then back for the week following that.
Alrighty.
Any
Well,
last
thank you guys.
questions?
I appreciate it. Have a great Sunday. Enjoy the rest of your week and get ready for the week at hand. We're back with training exercises, so I can't wait to see your guys' submissions. And be on the lookout. We might be posting a couple new stuff in the community, so just be on the lookout for tiny little minor things that we might be adding in the community. Other than that, I'm all good.
All right, all set. Have a great rest of your Sunday, everyone. Be safe, be responsible this week, and we'll talk to you on Wednesday.